What's going on, guys? This is going to be an exceptionally long video. In fact, it's probably my longest video I've ever made. I am covering 5 tickers in this video. On top of that, I am doing the markets, and I've got some great news for you guys. I did chapter everything out for you. The very beginning, of course, is going to be your main markets and your news. And then you're going to have all of your tickers. And in the first 3 tickers, I'm giving education. So I would urge everybody to watch the entire video. Don't do it all at once. And if you do, get some popcorn, a drink, sit down with your loved one, whatever it may be, because this is long and boring. But it does take me a lot of time to make these videos, so I do hope you guys appreciate all of the content I am putting into this video. Again, this is an hour long, and I forgot to mention one thing in it. Emotions. Just because we saw a lot of green today, guys, doesn't mean we're in the clear. You need to keep your emotions in check, all right? That is like the key #1 thing. Emotions need to stay in check. We've got a long way to go. The vast majority of the people that are holding these tickers that I talk about today are holding them from an extremely high level, and we've been dollar cost averaging down for a long time. And we're really hoping to see a heck of a lot more than just a 15 to 20% day to start being able to see some of our returns back to us, not let alone profits. So just keep that in mind. You've got to keep your emotions in check. With that being said, if you find value in my video and you like what I'm giving to you, make sure you show me that you like it by clicking that like button down there. It's free. It doesn't hurt you. It doesn't cost anything at all. And if you do like my channel, subscribe and hit the ringer notifications. That way you can be updated whenever my videos drop. I hope you enjoy the video, guys. And again, it's long.
What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own DD.
So, the markets. What the hell happened in the markets? Well, I'll tell you what, whatever it was, I'll freaking take it. Each individual market was fantastic today. Look at that. The SPY finishing up 1.5%. The NASDAQ finishing up 2%. The Dow Jones finishing up, what is that? 0.88%, almost a full 1%. And of course, the IWM, the ETF inside the NASDAQ that we basically follow for all of our short squeezes and small caps, that one there finishing up almost a full 2% as well. Going on an absolute tear. And in all honesty, an absolute tear the last couple of days since we've hit that low not too long ago. Now, let's go ahead and go on right into the individual tickers. Now, I've been saying this. What we're going to do is look at the individual time frames from hour, 4 hour to 1 day. This is very important to do when you're looking at the overall stock markets. To look at small itty bitty time frames, that's going to just drive you nuts when it comes right down to the individual indices and the sectors. So, if you look at the 1 hour chart, you're noticing that we are hovering back above that 200-day MA since the low about a week and a half ago. And we've been in consolidation mode. And as of right now, we are currently bouncing off of a high that we saw about 5 days ago. Now, this is in the SPY. And the things that I want you to pay attention to is what is unraveling. So, what you'll notice here is during the big breakdown, you'll see that we've come and formed this nice little cup formation. And also, we've dropped back down to form a handle. And this handle is currently level with the high that created at the peak of the cup. And what we're looking to see is for this thing to break over that handle level, that peak level. And that would show an absolute bullish tendency to go north. If it breaks over this particular line right here that I'm pointing out, in fact, let's just go ahead and draw that line up. Let's get a trend line out. And we go from here to here. If we can break this line and hold over top of that and just keep moving north, I would absolutely say that the reversal is in play. And the reason why I say it is because if you go from the 1 hour chart to the 4 hour chart, you're looking at the same exact situation. Now, on this chart, of course, the time frame does change, so the indicator changes as well. But that there is just, that's kind of moot at this point. What I'm pointing out is the cup and handle. Move to the 1-day chart, and you're back above the 200-day MA, and you're consolidating across it. But again, the cup and handle formation is absolutely there. You're seeing it across 3 major time frames, and showing that in the 1-day time frame, which in my personal opinion is probably the most important time frame when looking at the overall indice, that there is showing that we have consolidated across the top of the 200-day MA, which is the indicator that I use and most everybody uses to show what the trend, the current trend is, and we have double topped. And a double top is kind of a bullish indicator, and like I said, you're looking for it to move north from here. Cross that line, hold above it, and we're back into bull territory. And that is what I said several days ago when I said look for a hold above the 200. Also, take a look at Dow Jones. You've got the same exact thing happening right here. Cross down below the 200. We've made the cup formation, a handle, and a break over the 200. And look at this. The Dow Jones is actually showing that we are currently making a break over that level of resistance right there. And that's the 1-hour time frame. Take a look at the 4. Same exact thing. Breaking back above the 200 MA, crossing that threshold right up there. Here, let's level that out. It ain't working. There we go. Okay, so crossing back above that, moving over to the 1-day. 1-day, same exact thing as the SPY. We made the cup and handle formation, and we are currently trading above the 200-day MA. Consolidating across it, except for today. Today making a major breakout. Again, doing that double top, only this time breaking out. And then the NASDAQ. We've got a cup. We've got a handle. It's down below the 200-day MA, but if you remember correctly, the NASDAQ is the one that's been beat down more than the others. And as I said before, when we finally see the correction on the NASDAQ from the correction it made, look for that to be the stronger rebound, the stronger bounce, okay? Because it got pulled down further than everybody else. So it's got a lot more room to run up to make a better profit-taking level. All right, quick drink Sprite. Again, the can is going to disappear. Also, the other thing you want to also keep in mind, even on the indices, look towards your MACD and your RSI. That's going to give you a huge, huge signal on what's going on. As you can see, when it did make these bottoms, we were extremely oversold. The MACD did start to hook up, and then you had your golden cross right in here. And the golden cross is a super, super bullish indicator when it comes down to a long time frame, showing that it is moving north. It's got the power, the potential, the volume. The bulls are starting to take over. You could just keep going on and on and on with all the things that the golden cross absolutely means. All right, moving on to the Russell 2000. Again, no really need to look at that. It's not showing you much different as far as it goes across the time frames. Cup and handle, cup and handle, cup and handle. And again, same thing with the NASDAQ. You're looking for it to get back above the 200. And that's when you're seeing it back in bull territory. It won't take very long for it to do, in all honesty. It's only about $15 away. Okay, so with all of that being said, let's go ahead and move right on into the news of the day. All right, so the SEC is looking to overhaul the controversial trade settlement rule at the center of Robinhood's issues during last year's GameStop mania. So today, the SEC proposed a vote basically saying, they voted to propose a rule change that would shorten the trade settlement date from T2 to T1, basically meaning that all of these clearinghouses, all of these traders, these big time names are going to have to start settling their books in 1 day instead of 2 days. Also, that means it's going to shorten up the settlement for the retail investors. When we're out there making our trades will also settle in 1 day instead of 2 days. So the T2 settlement rule, they're looking to change down to T1. Now, with that being said, of course, they're blaming that on CEO Vlad Tenev from Robinhood, because he blamed T2 settlement on the main cause of last year's temporary restriction of certain volatile stocks. Now, keep this in mind. Robinhood was not the only company that halted trading on GME and on AMC. They're not the only ones who did that. But Robinhood was the main stage. They are the ones who took the brunt of the blame. And in all honesty, probably should be the ones who took the brunt of the blame. They were the ringleader as far as most people can tell. Now, I'm not going to read this entire article to you. I suggest all of you go ahead and do that. This is on the Market Insider, marketsbusinessinsider.com. I'll put a link to this in the description of my video. And just to be honest with you, this is a pretty awesome article. I suggest you go ahead and read all of this. And there's also a couple of spots in here where you can select it, and it'll take you to information like liquidity. It'll give you the definition of what liquidity is. It's a very interactive article, to be honest. I like this article. Moving on past that, that is super important. One of the things that absolutely drove what's going on with the overall stocks today, I do believe, at least the meme stocks. This is a meme stock thing we're talking about. Now, of course, the markets overall were green. We know that. But I cover a lot of memes. Anyway, the DOJ SEC probes dozens of firms in short selling sting. This is another thing that helped drive our stocks north. All right? Keep this in mind. There are names in here that we all know, and I'm going to highlight them now. Some well-known investment firms were named in the Justice Department's request. Includes Orso Partners, Melvin Capital. Where's it at? Oh, hey, I'm sorry. Sophos Capital and Carisdale Capital Management. Carisdale, guys. We really know who that is. This right here could have been one of the big driving factors. You could have seen institutional buyers step in as soon as this thing hit. Look at this. February 8th is when this was. This actually all kind of got released a lot earlier today. And once this got released, this information got released, institutions could have stepped in saying, oh my God, it's true. These guys are just doing short and distort reports. And now we can pick up these stocks at dirt cheap levels. And oh my God, they're shorted stocks. We could step in and start buying them and making tons of money. Retail stepped in, and big investors stepped in, whales stepped in, the options chains lit up today. Guys, there's a really good chance that these two big events are what helped drive the markets north. Now, also, keep this in mind. CPI data does come out tomorrow, and that's another big driving factor in the market. Now, do I think that the markets have factored in some of CPI's data? Absolutely. I think that if CPI data comes out dead even, if it comes out what they expect, I would not foresee much of a drop in the overall markets. You might see a small scare in the morning, but that would just be because they're trying to do a scare tactic. Market makers and hedge funds trying to pull down the stocks again to scare people out, thinking that CPI data was bad. But if it comes out even, I think the market's factored in for that. If it even comes out a little hot, I think the market has factored in for that. I wouldn't foresee more than a day to 2 days of correction. If it comes out cold, basically saying that we're doing better than they expected, of course we know Jay Powell said the other day interest rates are going to stay near zero. If everything keeps staying in that bullish, dovish manner, then I would expect to see more green candles tomorrow. Now, keep in mind, we saw a ton of green today, which means there's going to always be that opportunity for hedge funds and market makers to drive these stocks down. That means that they're showing some liquidity back into the overall pools for them to pull from. Does it mean that it's really there? No. Also, the other thing we're going to cover is the utilization across a lot of these stocks. In my live stream earlier today, we did this, and I'm going to do this again with everybody else now. Well, not now, here in a little bit. Well, actually, yeah, I guess now. Let's go right over here. So this one here is BBIG, and we're going to come back to all of this here in a little bit. BBIG, 100%. So we're just going to run through this really quick. MMAT, hit that, move over, hit the shorts, 100%. SCNS, shorts, 100%. AMC, shorts, 100%. GME, shorts, 100%. RELI, shorts, 100%. ARVL, shorts. Oh wait, they don't do that one on here. My mistake. RIDE. I think I did that on my live stream too. Shorts. 100%. And it keeps going on and on and on across the meme stocks. Now, the question arose, was it a glitch? No, it was not. As a matter of fact, Ortex, I do believe, put out a tweet earlier today stating that that was 100% good. I mean, they said that it was all accurate, and it could have been because of the rule change from the SEC today. Alright, so I was struggling with trying to figure out which order I want to do the tickers in, because I'm going to try and do a bunch of them, but I want to give you a little bit of education again on a couple of them as well, because there were some questions on how to find price targets and profit-taking levels. So first and foremost, I want to start with that. I want to start with the education end of it, because we can do that with the first couple of tickers really, really fast. So let's go ahead and move right on over to our charts again, and let's first look at Arrival. No, I'm sorry. First, we're going to look at Ride. All right, so ticker symbol RIDE. So this one here has been treating us pretty well. It did enter into a level of consolidation a few days back, and as I've said before, consolidation at any level is fantastic. It gets you ready for your next level up. And as you can see, we've done plenty of consolidation in an upward trend, as you can tell by our retracement. Now, this Fibonacci retracement is not just a retracement, it's an extension, and this is one of the things I want to show you how to do. I'm going to show you this across a couple of different tickers. So on here, I drew from the $2.38 mark all the way back, or I'm sorry, to draw the extension, you have to make 3 points instead of just 2. So you draw from the low, you go to the high, and then you go to the next low. And this would be the $2.38 level, and that will actually throw an extension all the way up for you. And if we bring our indicators down a little bit, we can shrink this down. You can see how high up that goes. That goes all the way up to a 361.8% increase on the overall profit-taking levels. So when you do that, it gives you support and resistance levels as well, just like it would on a regular Fibonacci retracement, which I'm going to show you here in a moment. And as you can tell, it bounces off of those levels really well. And you can also see that it is staying above that 200 MA. Right now, I'm on the 30-minute time frame, so that's 200 individual ticks that it is counting it across. And that's extremely bullish when you think about the overall aspect of things. Looking at a longer time frame, staying above a key indicator like that, and also in upwards consolidation, is a super bullish signal no matter what you are. Now, the other thing you want to look at is the cup and handle formation and the double top that it has created over the course of the last 3 days. Also, you can call it a great big old George W. If you'd really like to, if you're so inclined to say so, in all honesty, that is what you have. And that's a super, super bullish signal in RIDE. Also, you switch on over to the options chain, and you're going to see a similar category as far as it goes with options. Now, this is a very low traded options stock. There's not a whole lot going on here. It would help if I bring you up some more options. But as you can see, the overall open interest in this ticker isn't huge when it comes to the options chain. But the at-the-money strike is high for this ticker. So take it for what you will. It's not something that I would be trading heavy in options right now. I'd be waiting for, the options chain to pick up. But just showing you that the at-the-money strikes are a little bit heavier in open interest, and the implied volatility is climbing. Moving back over to the chart. No, moving over to the Ortex. All right, so as we had covered just a little bit ago, the utilization is at 100%. The cost to borrow has bumped up to 1.64%. The days to cover is at 5.37 days, and the shares on loan is 45.58 million shares. And that is 35.34% of the free float. And as of, this is for January 31st. Yeah, we haven't seen the new one yet, I don't think. Wait, no. Yeah, that is the new one. That's the new one. So, data for January 31st, 35.26 million shares, which is 30% of the overall free float. Today, look at this. Intraday, they increased their short positions. We climbed. It was a great day for Ride. Overall, Ride finished up 7.74%. Now, note these percentages. 7.74% is what Ride got today, meeting at a critical level of 322 for its double top. Back over the internet. All right, so it increased in short positions, the current estimated short interest is 39.66 million shares, which is 30.75% of the free float, and the cost to borrow max went up substantially today to 8.27%. And anytime that cost to borrow starts going higher, that means it's getting more expensive for the hedge funds and market makers, and in all honesty, retail shorters to short the stock. And that's another way that the hedge funds or the market makers and the broker dealers make their money. They will consume shares. They'll buy up shares, and you'll see some of these 13Fs that are like Vanguard, BlackRock, things like that. They'll buy those shares, and then they'll lend them out because they're lending them at 8.27% interest rate, or they're lending them at 199% interest rate, things like that. So always keep that in mind. Sometimes, and I've said that before, when you see these 13Fs and they're the big hedge funds and market makers, or I'm sorry, the big hedge funds, and market makers, and they're buying up all of these stocks. A lot of times they're lending the shares out. They're using them for shorting, all right? It's not always a very bullish signal, but I always love it when people buy the shares. So, I mean, it is. Damn if you do, damn if you don't. Anyhow. All right, so here we are at FinTel, 5.37 days to cover according to FinTel. So that's a pretty good length of time. 88.45 out of 100, which makes it 130 out of the 500 or 5,500 stocks that are on this list. That is a big jump up from the other day when we last talked about this. Now, take a look there. 1.9 million shares available to be shorted into the market. So there was a little bit of returning of shares when it comes down to the dark pools. Remember, this is also from a leading prime brokerage, and this leading prime brokerage is one of the big ones. I've always said I think it would be your Virtue, your Citadel, your Fidelity, one of the big ones that would be on the unlit exchanges that are able to trade across the dark pools. Because as we know, FinTel coincides with FINRA data, and FINRA is the dark pool. All right, 1.61% short borrow fee rate according to them, and at any given time during the day, it was right around the 3 or 2.5% mark. FINRA showing 42.76% of the overall volume for RIDE was short volume, and that's in the dark pools. We don't have any of this information as of yet. Now, I'm done talking about RIDE because we covered what we wanted to cover. I want to talk about the next piece of educational information. All right, so RELI, Reliance Global Group. This one here is another one that we've been covering ever so slightly. I get on it every couple of days, and today we're going to cover all of them, so why not this one too? Now, this is one of the ones that has been very interesting because this does not have any options chain, and I've been stating that you're going to play the bounces on this one, and I still hold true to that. And I also hold true to the same thing I say across a lot of the stocks, and that's because I use this trading strategy across the platforms. If it works, use it. And that is to watch your Fibonacci retracement. Always watch your Fibonacci retracement. Well, right now I'm at the 5-minute scale. It doesn't change where the Fibonacci is, but it does change a little bit of the way you can see things. So as you could tell a few days ago, it did start making this little bit of a dip here and came all the way down to $3.70. It did break down below a key level of support that I called out a while back, and it also broke below that 78.6% retracement level. Now, I have not been in RELI. I have no position in it at all. Until probably tomorrow when I see it confirm this yellow line here. If it gets back above it and holds above it, then I will probably re-enter. I prefer to go in here, but I think that there's a really good possibility that this could be its bullish trigger at this level here. Anyhow, with that being said, what I want to show you is how the Fibonacci retracement can turn into a Fibonacci extension and show you where you could take profits at a later date once it's done its initial movements. So we're going to go out to the 30-minute chart and take a look. So right here is the initial Fibonacci retracement I drew up. You draw from the very bottom of your bullish run, and at the end of your bullish run, and before it turns bearish, you put your point. And that was at $10.50, 100% of the overall run. Now, that showed us that the levels that it could come back to, these are your pullback levels, where you would then see for it to pull back and start making its next run. Also would turn into resistance levels as well, or support levels, whichever way it's going. Each one of these lines being support resistance. Now, with that being said, you also, once you found your bottom point on the next pullback, you would then utilize that as your extension level. So then you draw a third line down, which you'd have to draw a Fibonacci extension. We'll get into it here in one moment to do that. So it's a 3-point system. The first one, it goes from bottom to top, and then top to new bottom, which would be a higher low. See how there's a higher low there? Okay. Now, that gives you your extension. It brings it all the way over to here. Your extension shows you when it makes its bounce, places that it could, again, you're lining up with your retracement for the most part, places you could see consolidation, great consolidation here, and then a run and pop, which would be profit-taking levels, and then a pullback ability. Now, again, you pulled 100% of your extension level. That's a very, very bearish signal. And then it kept continuing down. Consolidated for a few days. And generally, I would say consolidation at any key level is going to be good consolidation and makes room for the next movement. But there was some news, I believe, that broke something about them possibly doing offerings or something else. I'm not too positive, where it did drag the stock down a bit more. But it seems to me it found a base. Now, again, I'm not holding true to that until I see it cross back over this yellow line. And even then, I might still be hesitant because I like for it to be back to that 61.8% retracement level from the original Fibonacci retracement. All right. And that's, as far as that goes with RELI, that is the chart leveling I'm going to give you. And that is the 30-minute chart showing you all of the support resistance levels. And again, that's just Fibonacci retracement lines with the exception of this yellow one being the $4.70 mark, okay? Let's move on to the Ortex data for that before we move on to learning how to draw the extension. Ortex data showing 100% utilization. You're going to see that across the board for all of them, but look at that cost to borrow. Cost to borrow is 322.9%. That is freaking outstanding. That is so ridiculously high. And at any given point today, it was 340.5%. Insane. The average is 300%. 0.12 days to cover. And the reason being is because it's a very small float stock. As you can tell, having 11% of the free float on loan, it's only not even 750,000 shares. That's 11% of the free float. Overall, almost 10% of the free float is short, and this was just recently updated. And you're seeing that there's 1 million shares, which is 9.25% of the free float. But today they increased their short positions 10 full percent, guys. That means that the estimated current short interest is now 10.17%, and that's no way, probably about 1.2 million shares roughly. Cost to borrow, again, we already covered that, but showing that there was a return of 145,000 shares and a borrow of 222,000 shares, showing the increase. Anyhow, moving on to the Fintel data. We don't need that page. We need that page. All right. Fintel showing a little bit different of a number, but remember, the difference between Fintel and Ortex is who reports to them. Ortex gets reports from the NASDAQ, the lit exchange. Fintel is your FINRA, that's your dark pools. So, going off of a different gauge. 93.2 out of 100, that is 29 of the 5,500 stocks that are on the short squeeze score. And there is currently only 100,000 shares available to be shorted into the market from a leading prime brokerage, Sprite. Yeah, that's good stuff, man. Short borrow free rate according to Fintel is 172.92%, but earlier today it was at 200%. Again, Ortex and Fintel, two different places, two different brokerages, couple of different brokerages, whatever it may be. They're going to have different costs to borrow. Anyhow, the short volume through the dark pools was only 35.52%, and I'm not sure if that's all of it. So let's go ahead and hop over here and take a look. This is Chart Exchange. I love Chart Exchange for this reason. They give us a little bit more detailed information. All right, we still don't have any of the information from the New York Stock Exchange, CBOE, any of that. So we don't know the true length of shorting. Remember, they can always short across the lit exchanges as well. It just makes it so that way you can't see it immediately. You can actually see the dark pools relatively quick. You just don't know anything that's happening inside the dark pools. Whereas with the NASDAQ, you can actually watch the ticker tape. You can actually physically see what's happening on the tape by tracking what, like ARCA, whatever. The TRF is the unlit exchanges and all that. So, but you can track it by watching the ticker tape or the time in sales. You can't do that with the dark pools. At least not as far as I know. Okay, so we don't have any of that information yet. We've already covered all the RELI stuff. All right, so on to the very last part of our education, and that is going to be ticker symbol ARVL, Arrival. So this one here has been an up-and-comer for me. Now, it has been a down and faller. I've played this one a couple of times, but as far as it goes with the overall stock and the overall company, this is one that I'm going to get behind. I'm actually going extremely long on this company. I have already bought a bunch of shares. I'm holding this one inside my IRA account. I think this is going to take me on into the future. This is not one that I'm going to be doing a lot of trading on. I've got a small number of shares that I will be trading through this, and also I will be playing inside the options chain as well. But as far as it goes with a long hold, this is one of them, and I would suggest anybody to look into this company. Arrival is amazing. They're an EV company that is going to soar. They are currently making buses that are at the proving grounds in Spain, and they're making the UPS vans, an EV UPS van. They've got a contract for, I think, like 10,000 of them, and they have the concept Uber car. Uber and them have joined up, and they have designed a car for Uber exclusively to be the new vehicle of Uber in a green sense. Plus, there's a lot of other things going on with the company, the inner workings of the company. For instance, their expansion with micro factories, not utilizing gigafactories, which takes up one central location, a large plot of land, limiting the employees, but allowing for multiple locations and a span of employees across the country and across ultimately the world eventually. So, with that being said, if you'd like to do a little bit more DD on ARVL, feel free to dig in. Like I said, great company overall. And I do foresee them being a big player in the future of commercialized EV products. Now, with that being said, this is where I get to show you how to draw up a Fibonacci extension. This is for everybody who does not know. First and foremost, we're going to go ahead and take this Fibonacci retracement out of there because it's very important to know how to draw that first. And I know this is only for people who have not yet been here. First and foremost, if you'd like to draw a Fibonacci retracement, this is on Webull and Webull only. First, you go up to the top here. You've got all of your little drawings here. This is for indicators, drawings, candlestick patterns, grids, and then your chart layouts that you've saved from the past. So you go to the pencil, which is drawings, and you come all the way over here. This is trend line, this is parallels, squares, all kinds of things. This is your Fibonacci's, all your different Fibonacci's. If you hit the little triangle, it gives you a drop-down box, retracement, extension, time zone. We'll get into time zones another time. This lesson is only about retracements into extensions. So the first thing you need to do is draw up your initial retracement, going from the bottom of your run-up all the way to the top of your run-up. That'll give you a 100% Fibonacci retracement. Okay, so that way it gives you, like I had said before, your key levels to look for in its drop. It came all the way down to that 50% retracement, traded across it, traded in between it and 38% before it made a small dip down into 61 to 50% retracement. It has been consolidating there, and then finally today, through the pre-market and throughout the day, made a break back above that 50% retracement level. And that to me is a very bullish signal. So at this point, I would want to go ahead and draw my extension. So again, I go back to the top line right here and I look for that Fibonacci retracement thing. I select my drop-down box. I pick the extension. Now the extension is slightly different from the retracement. What is different is it doesn't take 2 points, it takes 3 points. And that's the most important thing to know about the extension. And it completely follows your retracement. So if you just go over your retracement level, right there to right there, right? And then you take your third line down to the bottom of your run-up. That's the lowest point right in here, the bottom of it, and that will give you your extension. And I'm a little bit off on my lower line. There we go. So your extension shows that it kind of respects some of your lines. Now, what you're going to notice is that you are currently trading between the 50% retracement level and the 23.6% extension level. So what I would ultimately be trying to do would be land it on the 23.6% extension level. That is where I would want to buy in if I'm not already in. It confirms that you have made a bounce point. You've confirmed that 50% retracement by hitting another level. All right. All that's doing is just ensuring that you've got a good entry point, a solid entry point with lower risk of it pulling back. Also keep in mind, this is the 1 hour time frame and it is above the 200 tick. Okay, you know what? Let's go ahead and drag this out to a 30-minute time frame. It doesn't change a whole lot. None of these retracement lines differ, but it's going to show you where it is on the 200 tick on that. 30-minute time frame is a good time frame across any stock to look at both short-term trades and long-term trades. You can kind of just gauge it both ways with this. So on the 30-minute time frame, again, you're seeing how it made this double bottom and bounced. The double bottom bounce up here to the 50% retracement and is currently consolidating in this level. Again, if it gets above here at this level here, this would be a great entry point, secure entry point for your next movement up. Now, again, what the retracement does for you is it gives you key levels of support resistance / profit taking levels. If you wanted to start taking profits because you bought down here at $3.60, it would give you levels to do so. Now, if you did not buy until here, again, it's giving you your next key levels: 38%, 50%, 61.8%, 78%, and 100% extension levels. But the other thing it does is it takes you far beyond 100%. It takes you all the way up into here. I've got 161.8%. I also have 261.8%, which now you're actually coming into normal tradable lines, all right? Now, if you get to 261.8%, you have initiated more than likely a short squeeze of some kind, because this is a heavily shorted stock, which we're going to get to here in just a little bit. But, and then again, I've got the 361% extension level and 423.6% extension level. And these are all key profit taking levels in the event of a short squeeze. It's going to start out as a small run up into a lift off, where these shorts really took into play. Now, one thing you do need to keep in mind with this ticker like this is you've got to do your due diligence. You can't assume that everything you see on these big gigantic drops, let's pull back to the go back to the 1 hour. On these big gigantic drops, you can't assume all of this is shorts. As a matter of fact, it's not. When I first started covering this one, it was way back in here, and it actually did relatively well for a while. And then it actually diluted the stock. So some of this is dilution, okay? Just keep that in mind. But do not be fooled by that. There's a ton of shorting in here, even after the dilution, guys. So, with that being said, let's move on to the Fintel data. So unfortunately, there's no Ortex data for ARVL as of yet. Hopefully, they're going to work that into their equations here. So Fintel data shows us that there is currently 45,300,000 shares of short interest, and that is 27.5% of the overall free float. And it would take currently 2.55 days to cover all shares on loan. Now, scroll on down here and you'll notice that it's 87.02 out of 100 on the short squeeze score, which is 176 out of the 5,500 stocks on this list. You'll also notice that we've been dealing with a lot of really high up there short squeeze scores when it comes right down to it. Currently, there is 200,000 shares available to be lent from a leading prime brokerage, but that was as of 9 hours ago. There's been no update to them, and remember, this is a leading prime brokerage across the dark pools, one of the bigger ones, one of the big hedge fund market makers. All right, the short borrow fee rate currently is about 2.09%, and not too long ago it was a little higher than that at 213, 214. That's pretty good. Now, today in the dark pools, it was 47.17% of the overall volume was short volume. Now, remember, this is across the dark pool. We don't have any information on this yet through this or the chart exchange. I've already checked all of that information. And that's really all I've got for you on the ARVL ticker. Again, it is a heavily shorted stock, and I do foresee it becoming one of those ones that it would be a long hold. But don't be fooled, there's the potential of a short squeeze in the near future. And if it does start having violent movements, I'll probably take profits on both ends and just buy back in when it retraces back down some. Alright, we're finally going to get into the meat and potatoes. Here we are at MMAT, the first of the two big ones of the day. So earlier today I did say note the percentage that we went up. All of them went up a significant amount, but none of them went up like MMAT nor BBIG. And I do believe there's a couple of reasons for that. First and foremost, with MMAT, you did see a lot of the similar movement. Of course, you're going to see the same movement across the ETFs. It moved just like BBIG did. It moved just like RELI, ARVL. It moved just like all of them. But it moved higher, just like BBIG did, but none of the rest. And that is because it did have something to move on. It had a very small bit of news, a small catalyst that helped push it a little bit higher than the rest. And we're going to get to that here in just a little bit. But before we do so, the one thing I want to do is I want to zoom out. I want to bring this picture to a bigger picture. So first and foremost, great day today. Finished up 14.63% on the day on roughly 7 million in total volume, finishing at a plateau. Anytime I see these big run-ups and we can finish at a consolidation level, I am so freaking pumped. And I've said that before, especially since we're in this key level between $1.80 and $1.90. This 10-cent window right here, great. I love the consolidation level, but what we really need to do is zoom out. So we were beat down pretty hard, all the way down from $6.55. But we did catch a local bottom at $1.38 right here, and we bounced hard, and then we retraced. We have not drawn that Fibonacci retracement yet. Well, there you go. Fibonacci retracement is up. And we did make a pullback, but look at the key level pullback. 61.8%, guys. I've said it time and time and time again, and that is because I trade off of the fibs. 61.8 is a very bullish level to bounce from. If we retrace back down to that, respect that between there and the 50% retracement level for a consolidation zone, the strength of you having a move north on your next run is imminent. And there it is. Just like we've seen across these other tickers, that when you have a good consolidation level in this key range, 61.8 to 50% level, you're going to move up. Is it 100%? No. But I have back tested this, and I'd say 75 to 85% of the time, it's an upward movement. Even if it's not significant to you, it's still, in a day trader or swing trader sense, that is a big, big move today. 14% on any freaking stock is huge. All right. Now, with that being said, I did make a statement in my live video today, and I want to clear that up. Somebody was a little bit confused. I would not be taking profits at $2.88. I utilize that level as a level that you would see across any ticker. You find a strong level of resistance that's happened before that used to be support, and you can trade off of that. If you bought in at $1.38 on MMAT, if you were looking to make a swing trade, $2.88 would be a very technical level of resistance because we know how strong that level is. Let's go ahead and bring it out a little bit so we can see it. Right here at $2.88, we know that that's, right here, we know that that's tough. We know that's extremely strong because we've bounced off it both up and down. All right, I just wanted to clear that up. I wouldn't sell at $2.88 myself. I'm in this for the long haul. I've said that a bajillion times over now. I was just using it as an example. I was on the meta chart. Anywho's, so now that we're on the longer time frames, we're at the 1 hour chart, again showing that we have started to really show a little bit more of a bounce, showing that we're making that stair-stepping action. Now again, you're seeing a cup and handle over a long period of time. The long time frames are great for us. They're very bullish indicators when you take it out into deep time frames. Stop watching the 1 minute ticker. That is going to drive you nuts. It's going to drive you bonkers. Nothing good happens on the 1 minute ticker if you're not a day trader. If you're not in and out of this thing within a few minutes, what's it matter? It doesn't. It doesn't matter at all. If you start paying more attention to what the daily moves are or the weekly moves, you'll be a lot happier of a camper overall in the long term. And of course, you have the ability to average down. Anybody who got up there really high levels, these are the levels you want to be buying in at if you want to average down, because it brings your dollar cost average down very, 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 very fast. All right. Take a look at our indicators. So the RSI currently on the 1 hour chart is bouncing off the overbought area. We are currently neutral, but that's because it's come down in the after hours. Also, the MACD was on a tear. MACD is currently sitting over the signal line and can stay there very easily with just a small amount of volume push. We have seen an increase in volume day over day over day. We were trending the last few days at 3 million, roughly 3.5 million in volume. Today being, like I said, 7 million in volume. Let's move on out to another longer time frame, 4 hour chart, again, showing that we are cruising on the MACD. MACD is crucial, guys. It is a very, very good indicator to utilize when you're wanting to know when a stock is going to start those bullish movements. Does it mean parabolic? No, it just means it's a bullish move, and it could continue on for quite a while. What you're looking for is these long wicks, these long tails. If it starts getting really long and pushing it back down, then you can start seeing the end of your bull trend. Also, you'd be watching for volume to pull down as well. If you start seeing the wicks get really long on top and the volume get really small, volume moving down with the wick, then that's kind of showing that the bears are starting to take over, and you can start to see that in your RSI as well, and you would see that in your MACD as well. We don't see that as of yet. RSI is going to move, especially in the after hours, so you take this with a grain of salt in the after hours, just like you do with the price action. All right, and then finally moving out to that 1 day chart that I love so dearly, getting rid of all those lines so we can see something. Again, MACD, super bullish, over the signal line and hooking up. Histogram staying pretty much parallel as of now. We're looking for more volume to step in. Again, you do have that wick, that tail here. It is about half of the overall candle, but not to worry, because you are currently, again, looking at the cup formation of a cup and handle. I would really expect to see another small pullback in the next day or two. We could see an incline tomorrow. Again, CPI data could change everything. But I would expect some kind of a small pullback probably towards the end of Thursday into Friday. As swing traders and day traders step out of their positions. But that would also kind of help bring that curve into that handle. You'll see. If that happens, of course. Anyhow, let's move on out from here over to the informational subject things, or text. All right, so hit and refresh. Let's see if anything changes. All right, so Ortex showing that there was a very small return of shares today, and always keep in mind that does not mean that they were shorted shares. It does not mean at all that it was hedge funds or institutions. That could have just been retail returning a bunch of shares. Utilization did hit 100% today. Cost to borrow was at almost 2%. Days to cover is at 5.81 days. 38.82 million shares are on loan, and that is 15.5% of the free float. And as of the other day, 40.47 million shares are absorbed into short interest, which is, according to them, 16.42% of the free float. We know that's a much smaller number because of the institutional shares that are held by George Palicaris himself through Lambda Guard. That alone is huge, not to mention Greg McCabe's shares. And then there's more on top of that. Anyhow, cost to borrow max at any point in the day was at 3.5%, and that's one of the higher numbers we have seen as of late. And at the average was 2. All right, moving on to Fintel. So Fintel's going to give us quite a bit of information today. Going to kind of help us see why we saw 14, almost 15% incline compared to the 5 to 7% we saw on most other stocks. So 9.2 days to cover, according to Fintel. Now remember, this is dark pool information that you're seeing here. This is across the FINRA. They're still showing the same 40.5 million shares, which is 16.2% of the free float. Dark pool short volume ratio, well, we'll get down to that. I think that was for yesterday. Anyway, 83.85 out of 100 on the short squeeze score, and that is 335 out of 5,500 stocks. And there is currently 75,000 shares available to be lent from a leading prime brokerage, and that was as of 6 hours ago, so that really could be any number. 1.3% short borrow fee rate from whomever that happens to be. 42.33% of the overall dark pool volume was short volume, and as always, FINRA did make up half of the overall volume today. as we see quite often in metamaterials. We do not have any of this information as of yet, but I do have the chart exchange up already. There is a slight difference because we do have the CBOE on chart exchange. Let's hit refresh. Let's see if that data has changed for us as of yet. It has not, but currently at 46.81% overall short volume. We're still waiting for ARCA, National American, and the CHX to go ahead and plug their numbers in there. I'd be willing to bet the next ticker we look at is going to have the same kind of information. So moving on, new buyers. Here is something that you're going to start seeing, and I did see this across a couple of the other tickers. Bank of America did increase their position. I see here. Let's see by how much. Really, really fast. This represents a change in shares of 144.83%. Wow, that is crazy. They jumped up shares big time. All right, so moving on back. There was, like I said, we had a new position here the other day. We had nothing today, physically today. This is all from yesterday. And welcome to the team. Welcome to the holders crew, Swiss National Bank, Raymond James Financial Services, and Stewart Partners Investment Advisory. And by the way, when Swiss National Bank puts up a new position of 500,000 shares almost, that's pretty damn bullish to me. I don't know if the Swiss National Bank is going to be lending shares out or not. I couldn't tell you, but hell yeah. Absolutely. Hell yeah. Bring it on. All right. As far as it goes with buyers, or sellers, we did have a couple of sellers today. They weren't full closed positions. They were just reduces. Now, Raymond James and Associates did completely close a position. This was as of yesterday. But remember, this information is given to us in a delay, 30 to 45 days behind, roughly. All of that information is. Finally, I want to talk about this final thing. So right on down here, we saw Dr. Ram Kumar had the warrants produced, exercised, and done. He's now has 149,243 shares. That has been given to him. He had beneficial ownership of these warrants, and he exercised. Fantastic. That's absolutely great. He is now holder of the True Blue shares, and I don't see a sell here, so it's an exercise and purchase. I'm absolutely stoked about that, and of course it's at the 38 cent because that is the agreed upon price that was given to him. Now, with that being said, oh, and here he is. Here's his picture. Ram Kumar. Sorry, I said doctor. It's Mr. Ram Kumar. And yeah, there you go. And here is his filing. If you'd like to just go ahead and, oh, my bad. Went too far. There's his filing right there, showing he exercised it and purchased his common stock or exchanged it, however it may be, for the 149,243 shares. See footnote. The reported securities are beneficially held by Anura Investments Ltd. The reporting person holds 50% ownership of Anura Investments Ltd. So apparently he holds 50% of a investment company. Great. All right, so finally, let's move on to the very last ticker on our list. All right, I'm going to try and get this underneath 1 hour today. So, BBIG, absolute tear today and a super increase in volume from the last few days, but still kind of on average with a normal average volume day for BBIG. So, 19.27% up on the day. Overall, we did see 64 million in volume. Now, if you were to compare that across the past few days, again, we've got to pull out to our daily chart. Well, yeah, there we go. Zoom in. You'd look at the day before that, 16.84, 22.69, 20s, 25, and then you go back into your 50s and 40s back in there. So, again, we're starting to see a little bit more of that volume we should have, and also, zoom it back on in, what you also want to pay attention to, like I said before, is look what happened before that. We had a few good days of decent consolidation. Now, like I said just a little bit ago, look where your consolidation is between the 61% retracement level and the 50% retracement level. It made a very small dip right below that 61% retracement level and bounced right back above it the very next morning. It did not like being down there and fired crazy. Now, keep this in mind. BBIG has been on the threshold security list as of today for 13 days. So Rule 203 did take into effect. That means that market makers, hedge funds, clearing houses, brokerages, whoever had that thing short for the 13 days, not short, I'm sorry, failures to deliver and threshold security list for 13 days consecutive has to start closing out that position and buying the underlying stock. Not a like stock, the underlying stock, that physical ticker. It shows that there's manipulation, that they're manipulating the physical stock itself when they're on that threshold security list. And they have to start closing out the position. Now, again, I don't know if they're on it as of yet today because that does not update until midnight. We won't know until midnight tonight, and I'll update everybody tomorrow morning on Twitter if we hit it for a 14th day. And all that simply means is that there is an extended number of FTDs that have not been taken care of, and they have been on the securities threshold list, and they're going to keep going onto the securities threshold list, which means you could continue to see more bullish price action leading up into Friday, and the next Friday, which is monthly expiration, creating gamma squeezes, creating short squeezes, creating all kinds of shorts needing to cover. And always keep this in mind, shorts won't start covering their position. The big shorts, retail shorts, might start covering anytime because they're not in it at these high ridiculous levels. Shorts aren't going to start to cover until they need to, until it's dangerous. You got to figure the vast majority of your major short positions in this latest run have come from $6, and before that $9, and before that $12. So you've got those three major levels of big short positions all the way down that before they'll even start to cover their position, it's going to have to go 100%. It would be 100% above their level before they'd even think about it. Because they've made so much money on the way down, they can afford to hold that on the way up. I mean, you got to figure they've made billions, if not trillions of dollars off the backs of retails on all of these meme stocks. Every one of them. So just always keep that in mind, that this right here can keep going and going and going. But first, it could always pull back. And I would actually expect to see a small pullback after the parabolic move we saw today, just like we did on MMAT. But again, like I said, look at that percentage lift. Compared to the other ones we talked about earlier today, it's a significant difference because there is something that could have been a catalyst to help drive it even further. So before we get into that, take a look at your MACD, take a look at your RSI. RSI is currently overbought. It is struggling to get back down into the neutral zone, all right? And again, that is why I would say expect a small pullback because it is extremely overbought. And then that would also shove your MACD down. Let's go out to a longer time frame. The 4-hour chart is going to tell us close to the same thing, except down here in the histogram, you're showing a nice hook on that MACD. The MACD is coming over the signal line. It did have the golden cross earlier this morning. This was first thing this morning. Golden cross happened, which means there is still a lot of movement available north for this stock. And we did break out of that pennant that we had been drawing up. We are currently out of the pennant. We want to see it hold at least this 50% retracement level where it's currently sitting. At least that level throughout the day to be able to consider a full-on break of the trend channel. All right, so now that we've talked about all of that, and we would also like to see more volume to keep pouring in. That's the other thing too. You always want to remember, for the movement to stay north, you want to see more buying volume and increased buying volume to come in. That would create more buyers to step in because they see the increase in volume. It's like kids to candy. You know, the more candy that's there, the more kids you're going to get. Moving on to Ortex. So BBIG, Ortex, again, 100% utilization, just like we've seen across every single one of these tickers. Cost to borrow, 104.07%. Days to cover, 1.19%. Shares on loan, 38.87 million shares. That is 31.62% of the free float. And as of today, there's 38.89 million shares shorted into the market, which is 29.04% of the free float. Again, showing that the other day what they did to you was not a coverage event. It was just manipulation. It was a way for them to just say, hey, guess what we can do? We can show you that it looks like we're covering. It could show you it looks like we're giving shares back, but we're really not. All right. Today, the cost to borrow max was at 200%, and the cost to borrow average is 137%. The estimated current short interest is down compared to the exchange reported short interest. I don't understand why that is, considering it's a newly updated number, but I guess it'll probably work itself out in the morning, I would assume. Anyhow, oh yeah, average number of days on loan. I don't think I covered it on any of the tickers. Oh, we'll do it on this one. It is currently sitting at 51.14 days. Let's move on to short interest. Okay, so Fintel showing basically the same information right up here. 1.68 days to cover compared to 1.2. 97.79 out of 100, which is number 2 on the short squeeze score. Now, with that being said, I want to see who is squeaking us out right now. Oh, TSRI is the number 1. Ooh, if anybody's interested, there's the top 23, top 27. There you go, short squeezes. Screen cap. And gone. Okay, so currently 4,000 shares available to be lent from a leading prime brokerage on BBIG. That means there is virtually no shares to be lent out. It has been that way for a couple of days now. Had a bug I had to kill. It was huge. Anyhow, so it has been very low shares to borrow for a couple of days now. And you'll notice anytime it goes to 0, you'll see an NA down here because they can't charge anything to borrow them because they don't have anything to lend. Anyhow, currently showing that in the FINRA, the volume today was 41 million total in volume out of the 60. And that was 41.93% of that was short volume. This is well over half of the overall volume in the dark pools, not on the lit exchanges, dark pools, guys. Moving on past that, well, we already did that. Inside ownership, or I'm sorry, institutional ownerships. Take a look. Swiss Bank. There's another Swiss Bank buy-in, 211,900 shares. We just got that with Metamaterials too. Only a lot more shares were purchased. But again, I don't know what they're doing with them. It could be bullish, it could be bearish. We really don't know. But a buy-in shares is a buy-in shares. Also, again, Bank of America Corp. 889,000 shares. It does not mean that's what they had before. This is just an increase, not a new position. But again, this is all from the other day. Main Street Financial is also in Metamaterials as well, and Raymond James is actually the one that just closed out of Metamaterials. So you can see that there's a lot of things going on here. There's similarities between all of these different meme stocks. These are all in a lot of those meme stocks. And Bank of America showed up a few times today. And then as far as it goes to the sellers, nothing major. You have Dimensional Fund and Trust Corp Financial Services. Both show up as a full off sale. And I'd be willing to bet it wasn't any kind of major position. Now, with all of that being said, let's move on to what I think is what made the stock move exponentially. So, Shaq has signed with Lomotif. Lomotif is going to be presenting this on their platform, Shaq's Funhouse, from Wynn Resorts in Vegas. And we know this is true because Shaq himself, don't miss the greatest party of the year. Live stream, hashtag Shaq's Funhouse on Lomotif this Friday, hashtag Shaq Fun Lomo. There you go, guys. And that confirms it right there that we've got Shaq on Lomotif. And Lomotif is doing the best they can to bring all of the biggest names, the biggest celebrities into their platform to help push their stock forward and to help make their platform better by creating that celebrity appeal. You're not going to see a lot of this stuff come across the news wires from Lomotif, from BBIG, from Cryptide. You're not going to see that. They're expecting the celebrity to be promoting that for you. And that's exactly what happened here. The celebrity promoted the platform, and that's what you want to see. More celebrity acquiring the platform and then showing it off on their Twitter pages, their Facebook pages, and things like that. That's going to help bring attention and more viewers and more subscribers to the physical platform. And with that being said, guys, that's what I got for this video today. I'm sorry it's super long, but I hope it educated. I hope it gave everybody the information you need to know. And please know that it takes me like 5 hours to record a 1 hour video. Peace.